Hey everyone, it's Julie here with TipRanks. Today we're taking a look at two of the best rated stocks in the last 30 days. So let's get into it. All right, guys, welcome back. Thank you all so much for being here. Today, we're taking a look at two trending stocks. These are big names in the tech sector that come in as the best rated stocks in the last 30 days, but both of them have been trading in the red for this past month. We're going to take a look at these companies using TipRanks' newly launched AI analyst Spark, see what's been going on with them lately, and of course, what those Wall Street analysts are predicting for the stock's future. We found these stocks over on the TipRanks Trending Stocks page. That is found right at the top of the Research Tools menu. Here you can find the best, worst, or most rated stocks over the last 30 days, 7 days, or 72 hours. Now, just yesterday I talked about Amazon and Nvidia, who are some of the most rated stocks, so we're moving just a bit further down the list. You can check out the trending stock page for yourself over on the TipRanks website or right on the mobile app, which you can download by following links in the description down below. Just before we get into these trending stocks, this is a reminder that if you enjoyed today's video, make sure you hit that thumbs up button and that you're subscribed to the channel. Now let's dive right into these two trending tech stocks. First up, we're taking a look at Snowflake. Their stock trades under the ticker SNOW or SNOW, currently priced at $163. They have had quite the year. Overall, they are down 3%, but in the last 6 months jumped up 48%. However, more recently, in the last 3 months, they are in the red, down nearly 10%. Snowflake is a cloud-based data warehousing company that was founded back in 2012. They focus on data storage, processing, and analytics services. Their core product is its data cloud platform, which allows organizations to store and analyze data using a single integrated solution. The platform supports a variety of data workloads, including data engineering, data lakes, data science, and data application development. They make money primarily through a consumption-based revenue model where customers are charged based on the amount of data stored and the computing resources used on its platform. They have key partnerships with major cloud service providers like Amazon Web Services, Microsoft Azure, and Google Cloud. Taking a look at our AI analyst Spark, Snowflake currently scores a 69 for a neutral rating, reflecting its strong growth potential and innovative capabilities, offset by profitability challenges and valuation concerns. Jumping down to their earnings call summary, they shared their Q4 earnings report on February 25th, and overall the results were positive. They saw strong revenue growth, up 28% year over year, and that $943 million did beat estimates by over $30 million, and they also saw high net revenue retention and new product introductions. Their earnings per share of 30 cents beat expectations by 12 cents per share. Around the same time, they did announce that their CFO would be retiring and that they were actively searching for his successor. The stock has been trending with Wall Street analysts following that quarterly report, with many analysts increasing their price targets. One recent increase came from a 5-star analyst at Moness. They said that despite a slight deceleration in growth metrics, the company's positive outlook for fiscal 2026, including projected increases in product sales and operating margin, support their buy recommendation. A 5-star analyst from Oppenheimer also increased their price target and named Snowflake as a top pick. They noted that Snowflake delivered better than expected Q4 results on broad-based demand. They are bullish and continue to view Snowflake as a top pick, seeing the strong Q4 momentum continuing through the year with room for upside to guidance, especially in the second half of 2026 as their portfolio expands. Altogether, Snowflake has 36 Wall Street analyst ratings, and it does come in as a strong buy with 32 buys and 4 holds. The average price target comes in at $213, implying an upside potential of nearly 31%. Looking at those ratings down below, you can see a bunch of these analysts bumping up their price targets. On the low end, we do have a hold at 171 for an upside of 5%, while our high-end price target is 235, which would be an upside of over 40%. For our second trending stock, we're taking a look at CrowdStrike Holdings. They trade under the ticker CRWD, currently priced at $351. This is another stock that's seen some ups and downs this past year. Overall, they are up nearly 7% in the past year and are slightly red over the last 3 months, but in just this last week, they've dropped 12%. CrowdStrike is a leading cybersecurity tech company, specializing in endpoint protection, threat intelligence, and cyber attack detection and response solutions. They were founded back in 2011, and they operate in the cybersecurity sector, known for their cloud-native Falcon platform. This platform provides comprehensive real-time protection and visibility across all endpoints, enabling organizations to prevent, detect, and respond to cyber threats effectively. They make money primarily through the sale of their subscription-based cybersecurity products and services. Their key revenue stream is their Falcon platform, which offers various modules for endpoint protection. Now, relating to that recent drop on the stock chart, CrowdStrike did just come out with their latest earnings report earlier this week. They did come out with both an earnings and revenue beat. However, a weaker than expected future outlook has been weighing on the stock. For their fourth quarter, they reported earnings per share of $1.03, beating expectations by 17 cents, and revenue of $1.06 billion did grow 25% year-over-year, beating estimates by $20 million. They had record-breaking free cash flow, significant growth in their cloud, identity, and next-gen businesses, and they also had some strong partner and marketplace performance. The company's annual recurring revenue grew 23% year-over-year. However, looking forward, the company's revenue and earnings per share guidance both fell short of expectations. Looking at our AI analyst overall score, CrowdStrike currently scores a 77 for an outperform rating. Technical analysis does suggest potential short-term volatility, but long-term fundamentals remain solid. Attention to profitability and operational efficiency will be critical to justify the current high valuation. CrowdStrike is trending following this earnings report, with plenty of analysts weighing in. This time we do have some increasing price targets, but also some lowering. One analyst that recently weighed in while lowering their price target but maintaining a buy rating came from Goldman Sachs. They said that the company's net new annual recurring revenue was solid, but that the stock fell on weaker margins. They added that CrowdStrike indicated that the move to Flex has up-leveled its sales rep to focus on more comprehensive strategic selling, and in turn, customers are tracking ahead of their planned credit consumption plans. Then we also had an analyst from BMO Capital who increased their price target. They said that the stock is one of the best-positioned companies in the security market, though its results for the next few quarters will continue to be impacted by customer commitment packages and driven by the outage. Some patience is required, but BMO's introduction of fiscal 2027 estimates reflect normalized growth and margin outlooks. CrowdStrike has attracted 34 current analyst ratings, coming in as a strong buy with 30 buys and 4 holds. The average price target comes in at $421, implying an upside potential of about 20% from current prices. Taking a look at those recent ratings down below, pretty much all of our price targets are in that double-digit upside potential. The low-end price target would be this buy rating at $347, which is now a downside of 1%, while our high-end price targets come in north of 34% at $475. So that is a quick look at a couple of the best rated stocks over this past month. Let me know your thoughts on these two tech stocks in the comments down below. I always love hearing from you guys, and let me know if you've checked out our new AI analyst page and your thoughts on that as well. Of course, please keep in mind these videos are never a suggestion to buy or sell any specific stock, so please make sure you're always doing your own research and due diligence. Thank you guys so much for watching. Have a great day. I'll see you back here next time.